Once again, we're featuring the weekly chart on Google. Not only are we going to feature that, we're going to feature the 11/19 monthly options expiration prices. We're going to be monitoring every one of them like we always do. When we get into the December mode, we're going to be monitoring a 520 put that we bought as protection way down below the market. There's watching the 575 put, which was a major area of support in this last shakedown in the prior 2 weeks. We'll be watching below the market at various calls that are in the money to see how they maintain their values here. And this is the open interest model at some of these contracts. So there is, at the $600 call for 11/19, there's 5,200 open interest. So there's a lot of open interest there. People really believe that Google is a good expiration at that because of the open interest is there. But nonetheless, what about the $600 put? We'll be watching how that put plays into market volatility, such as Greece, Italy, Portugal, Spain, anything else, super committee in the United States, anything else that they could market down. Is where do we apply these trades to protect ourselves from price volatility? MMTs. So this is a put and call structure as we start tomorrow, which will be 11/14 on Monday. Today's 11/13/2001. Now, having looked at how strong that chart is, what we will do now is we will take some of these call and put strategies that I have talked about in this video, and we will take a look at what a $600 call looks like on the daily chart. And it's a call chart. It's a 600 November. The low end of the contract was way back over here on 11/1, not that far ago, 630, and they went to a high of $19.10. What a nice pop. Then they got marked back down to 690 here, and on Friday they got marked back up to the high of 1570. That's on the $600 call. We'll be giving alarms out tomorrow of where we're looking at to see that if the equity in its weekly pattern breaks up here and challenges these highs up here at around, let's say, 615, 620 up at the top up here, that where do these calls go when we come up and challenge that next resistance level on the weekly chart? So here is a $600 call that I have. I'll also be happy to let the people know of MMTs is what that $600 put looks like, the opposite side. And here's the $600 put for November. The low was 360 and the high was 950. So they marked them all the way down here. That's a $600 put that we're going to be looking at, and it too is getting fairly cheap. So we may have to transact this side of the market and buy this side on the dip when they mark it down, using the short-term 600 put if necessary. If necessary. If necessary, we can also come over here to the other put option that is at the bottom and should not be overlooked, and that's called the $610 put. And it too was up here at $21.50 and got marked down on Friday to $7. So they're not expensive now. $21, yeah, you were buying 10 contracts up here to protect it. It was $21,000. Now it's worth $7,000. The lower this goes at the $610 put, we have to put a trade on there in case we have a pullback and it goes up in value. We cash it in and add to the call side. So call and put side strategies is I've got a $610 put and I've got a 600 call right here. $600 call, $610 put. We're going to put the trade management on there based on what? This weekly, big weekly breakout. What a bullish breakout. Rising weekly movement averages. And that the trend still has to come up and try to break these highs and these highs over here ultimately by year end. And Google's an underperforming asset, and it's not exonerated from volatility. So the put side of the market is being able to position in that volatility, even though that the bull trend, there's been a new bull trend born, a new bull cycle. I'm above all the weekly movement averages, the 20-week, the 50-week. I'm 4 weeks closing above it. I'm just doing everything. I've got 3 weeks buy signal that's getting stronger, but when I get up here to these levels, I'll be short-term overbought. So I'll be selling my calls and buying my puts, because Google will have its pullbacks like it does here, like it did here, like it did here, like this weekly consolidation is so powerful, and there is still room to run higher. And we will be monitoring both sides of the call and both sides of the market for pullbacks in Google. The 610 put, they marked the premium down. It's cheap down here. It can get cheaper, but it's cheap down here to hedge the other side using the SMF risk management skills with the risk management plan and everything that follows thereafter, and trading the bellwether Google on this bellwether Google bull trend that you see right here. That's that 4-week consolidation. Normally what happens, you break out, you exhaust yourself on the high, you sell the calls, you buy the other side of the position. When that happens, they mark the put side down where you can't help but buy money then and make money. Right now, we're waiting for the last part of this bull weekly trend to come up and challenge these top resistance areas. Resistance area 1, and there's also another one right up here at that all-time peak high of 2011. High alert, Google.